The deadly wildfires are also testing California's efforts to stabilize its insurance marketplace. This after many insurers stopped issuing residential policies because of the high risk of fire. In recent years, hundreds of thousands of homeowners in the Golden State have struggled to find fire insurance. The recent blazes could make coverage more expensive and even harder to find. Last year, for instance, State Farm discontinued coverage for more than 70,000 homes and apartments in California. All right, let's bring in Raymond Tittmann, managing partner at Tittmann Weix, a insurance law firm that advises on a wide range of claims. Raymond, great to be with you today. And again, we are so sorry for everything you all are going through in California right now. We mentioned the tens of thousands of people who lost their homes or their home or renter's insurance prior to these wildfires. Can you tell us why State Farm and other insurance agencies canceled those policies in the first place, and talk about this insurance crisis in California?
Yeah, even before these fires, it was terrible. I think the commissioner of insurance said that estimated 7 out of 12 major insurers were leaving the state or canceling policies, and that was even before these fires. I think the estimated losses, according to AccuWeather, their preliminary estimates was $52 to $57 billion in losses, and between 20 and 50% of that would go to insurance. And just yesterday, they updated that estimate to 135 billion to 150 billion. So it was a major crisis before these fires, and because they've hit the most expensive parts of the state, it's a significant problem. I just don't know how people are going to find insurance or how it's going to be affordable. In terms of why that's happening, I think there's three main reasons. So the first one is there's a California Proposition 103 that was passed several years ago that require insurance companies to be approved for any rate increases. And the Department of Insurance here in California just wasn't approving rate increases. They were either slow playing those requests or not approving them at all, or approving very small amounts. And so insurance companies were just, at the end of the day, losing money to do business in California. And so as much as you would like to keep rates down, ironically, they're not able to charge as much as they need to make money and to do business in the state, which I think leads to reason number two, which is just everything you do in California is insanely expensive, whether it's materials, whether it's labor, it's regulations. Trying to build anything in California just costs way more than it should. And so you don't see this happening in other states that have fires, that have hurricanes, that have floods. But it's a problem in California because of how expensive it is to do any business in the state.
Yeah, we're almost out of time. But Raymond, I'm sorry, I got to jump in here real quick. I want to ask you a question. For those people who maybe had their insurance policies canceled, maybe they weren't able to get insurance after that. I don't know if that's the case for everyone in California, but what happens to them? If they lost their home, and we see a lot of these homes are just devastated.
Yeah, there's an insurance of last resort called the FAIR Plan, but it's about 3 times more expensive than your average insurance policy. In the famous zip code 90210 in Beverly Hills, I think the average cost of insurance is $10,000 a year. And so it becomes unaffordable in a state that already is very unaffordable.
Well, so much more we can talk about. We have to leave it right there. Raymond, thank you so much for talking to us about all this. We appreciate it.